Hi, hello and welcome to VM Commerce. This is Meenakshi. Today in this video we are going to discuss about the 11th Standard Accountancy Unit 8 Bank Reconciliation Statement. Shortly we are telling BRS, the theory part 1. So before getting into the topic to know about BRS, we have to know about the bank statement, that is the meaning of bank passbook. So this is a statement, simply a copy of the customer's account in the books of a bank. A customer who is running a business or some other person who is having the account in a bank, that account statement is called as bank statement. So this account shows all the deposits and withdrawals of the customer, how much he has deposited in the bank and how much money he has withdrawn from his account, and the total balance available in the customer's account. Total balance available means the cash at bank, what amount he is having in his account on a particular date. So this is the meaning for the bank statement or bank passbook. Then, so what is inside the passbook? That is the format of bank passbook. What are all they are going to enter? The passbook is maintained by the banker only. He is going to enter all the transactions. So the inside the passbook, we are having the date of the transactions, what type of transactions he is doing, whether he is withdrawing or depositing the money. Then credit column, debit column, balance amount, then signature or stamp, seal. Okay, so in debit and credit column, what are all the transactions they are going to enter? That is the amount. The withdrawals are shown as a debit. So the withdrawals of the customer, how much he is taking money from his bank account, that is shown in the debit column of the passbook. Okay, then the amount deposited by the customer is shown in the credit column of the bank statement. Okay, so debit column, withdrawals of the customer. In credit column, how much he is depositing in his account, that amount is shown. So remember, here they have given one note. In the cash book it is the reverse. So reverse means, we will see in the next heading how it may be reverse in cash book. So this is inside the passbook, that is format of passbook. Remember, debit column, withdrawals are shown. In credit column, deposits are shown. Then what is the meaning for bank overdraft? When you know about that passbook, you should know about the meaning for the bank overdraft. So when the business is not having the sufficient money in its bank account, it can borrow money from the bank. That means if a customer is not having money in his bank account, that is, it may be show zero balance, but he can borrow the money from the bank. So the amount overdrawn from the bank is called bank overdraft. So how much he is withdrawn over his balance, that amount is called as overdraft. So this means unfavorable balance in the bank account. Unfavorable balance, negative balance, overdraft, all are equal only, same meaning. Unfavorable balance, negative balance means it is in minus. Okay, simply. So that is called as a bank overdraft. Okay, the current account is most suitable for the business concerns. Bank overdraft we have learned. Who can avail this bank overdraft? Not a general public, not a common man can get this bank overdraft. If we are having some savings account in a bank, we cannot have this facility of overdraft. Only the person who is maintaining current account in the bank, that person can alone withdraw the money, can avail this facility of overdraft. Okay, so the current account is also only available to the business people who is doing the business. That person can alone open this type of account. Okay, so we are opening a savings account, a recurring deposit account, fixed deposits account, something like that. So only a business person can open this current deposit. Then current account holder only can have this bank overdraft facility. Okay, so in this basis, we are having two things, that is comparison between the cash book and passbook. So in the format of passbook, they have given one note, it is a reverse in cash book. Okay, so bank statement we have discussed. Debit balance, in debit column we are having overdrawn, that is withdrawal of the customer. So withdrawal of the customer, so bank passbook shows debit balance means overdraft of bank passbook, negative balance. Okay, bank statement, credit balance means favorable balance, because in credit column deposits of the customers are shown. Okay, this is simple. In cash book, you will know already that triple column of cash book or whatever may be the cash book, debit side we are entering the receipts and credit side we are entering payments. Okay, according to the cash book. So the cash book is reverse. Cash book shows a debit balance means it is a favorable balance. We know that already a rule, cash book always shows a debit balance only. So cash book debit balance means it is a favorable balance. Cash book credit balance means that is payments column is more than the receipts column, it is a overdraft, negative balance in cash book. Okay, so the you have to know this. Bank overdraft unfavorable balance of cash book is same, debit balance of bank statement and debit balance of cash book, and credit balance of passbook and credit balance of cash book. Okay, favorable, unfavorable, so it is a reverse in cash book. Bank statement debit balance means overdraft. Cash book debit balance means favorable balance, positive balance. Okay, positive, negative, you can easily remember this positive and negative, favorable and unfavorable. Okay, so that is why I told unfavorable, overdraft, negative, all are equal terms only. Okay, the comparison between the bank statement and cash book. So we have discussed this topic. No, this is the debit column of passbook shows the withdrawal. Okay, but the debit column of cash book shows receipts. That is favorable balance. So both are equal. Then equal, why I am saying, when you prepare the BRS you will come to know that both are equal. So both the format. Okay, then payments side, credit side of the cash book and that favorable balance, this is payments, this is unfavorable balance in cash book. Credit balance in passbook means it is a favorable balance. See, positive and negative, here negative and positive. So this is a simple comparison. So cash book entries are just a reverse to the passbook entries. Okay, then the differences between the bank column of cash book and bank statement. So we are discussing only about the bank column of cash book. The bank column will be coming in triple column cash book, 3-column cash book, discount column, cash column, bank column. So we are discussing only the bank column of cash book. Okay, that alone we are going to compare with the bank statement, that is passbook. Okay, first difference, bank column of cash books. The cash book is prepared by the business concern, that is customer. Okay, bank statement is prepared by the banker. Then cash deposits are entered on the debit side of the cash book. Cash deposits means you can easily know cash deposits, that is cash received from the business is receiving some money and they are going to deposit in the bank, that is cash deposit is an asset to the business, so it is a debit balance, receipts. Cash deposits are entered in the credit column of the bank statement. Credit column is deposits of a customer. Okay, credit balance, credit column of the bank statement. Then cash withdrawals are entered on the credit side. Of course, cash book, credit side is the payment column. So cash withdrawals, if we are withdrawing, that amount is entered in the credit side of the cash book. Then here cash withdrawals are entered in the debit column. Customer's account debit column denotes the withdrawal of the customer. Then check deposits. Check deposits are considered as the check received by the business. So it is debited on the day of deposit. When the check is deposited in the bank itself, we are going to debit the amount. That is just like we have received the money. Like that we are entering in the cash book. But in passbook, the check deposits are credited only at the time of realization. Okay, when the money actually comes from that check, at that time only the bank is going to credit the money. Okay, check issued are credited on the day of issue of check. So check issued means check paid by the business. So it is a payments to the business. When they are issuing a check on the day itself, they will be crediting the money. But the check issued by the customers are debited by the bank only after the payment are made. When actually the amount is paid to that person, at that time only the bank will debit the money. Then collections and payments as per standing instructions. So when a business or a customer is giving standing instructions on behalf of the customer, the bank is going to collect some money or pay some amount. Okay, so that standing instructions will be entered in the cash book only after cross checking with the bank statement. Only after seeing the bank statement only the business person, the customer, will come to know how much they have collected on behalf of them, how much they have paid on behalf of them. Okay, but in collections or payments as per standing instructions means the first bank statement, the banker will enter the transactions in the passbook. First the transactions are going to enter in the passbook. After seeing the passbook only the cash book will enter the money. Then it is balanced at the end of a specific period. The cash book will be prepared once in a month or 2 months once, something on a specific date. But the passbook balance, it is balanced after each and every transactions. When 10,000 is deposit, immediately they will credit the money and show the balance of the account, how much available bank balance in his account. So immediately after each transaction the banker will enter the money. So these are all the differences between the bank column of cash book and bank statement. Okay, if I have given the video Tamil also in my description box. If you are not able to understand in the English concept, you can check with the Tamil. Okay, thank you.